Ever toss and turn at night worrying about your hard-earned cash? Let's face it, financial security is a top priority. You work tirelessly for your money, so where you store it matters. Traditional banks have been the go-to for safekeeping finances for decades. But with the rise of online financial platforms, a new question emerges: are these platforms as secure as your local bank? Today, we're diving deep into Wealthfront, a popular robo-advisor platform. We'll crack the code on Wealthfront's security measures, specifically their cash account, and see if it stacks up against a traditional bank. So, buckle up, and let's navigate the world of Wealthfront security. Banks versus robo-advisors, understanding the landscape. Before dissecting Wealthfront's security, let's understand the playing field. Traditional banks are familiar territory. They're insured by the Federal Deposit Insurance Corporation, FDIC, which protects your deposits up to $250,000 in case of a bank failure. Robo-advisors, on the other hand, are a relatively new invention. They're automated investment platforms that use algorithms to manage your money based on your goals and risk tolerance. Wealthfront falls under the robo-advisor umbrella, but it also offers a high-yield savings account called the Wealthfront Cash Account. This is where things get interesting. Here's why. Wealthfront Cash Account, safety in numbers. Unlike a traditional savings account, Wealthfront doesn't hold your cash directly. Instead, they use a process called deposit sweeping. They divvy up your money and spread it across several FDIC-insured partner banks. This might sound risky at first, but here's the twist: Wealthfront leverages multiple banks, significantly boosting your FDIC coverage. That's right, with Wealthfront Cash Account, your funds could be insured for a whopping $8 million for individual accounts and a staggering $16 million for joint accounts. How does this work? Let's break it down. Remember, the FDIC insures up to $250,000 per depositor, per insured bank, per account category. By spreading your cash across multiple FDIC-insured banks, Wealthfront effectively multiplies your FDIC protection. Security beyond FDIC, Wealthfront's fortress. While FDIC insurance is a significant safety net, it's not the only security measure Wealthfront employs. Here are some additional features that solidify their secure standing. Encryption. Wealthfront utilizes industry-standard encryption technology to safeguard your personal and financial information. This scrambles your data, making it unreadable to anyone who shouldn't see it. Two-factor authentication. 2FA. This adds an extra layer of security by requiring a second verification code in addition to your password when logging in. Think of it as a double lock on your account. Account monitoring. Wealthfront constantly monitors your account for suspicious activity. If they detect anything unusual, they'll notify you immediately. Regular security audits. Wealthfront undergoes independent security audits to identify and address any potential vulnerabilities in their systems. The verdict: peace of mind with Wealthfront? So, can Wealthfront compete with the security of a traditional bank? The answer is yes, and in some ways, even surpass it. With FDIC insurance reaching up to $8 million and a robust security framework, Wealthfront provides a strong case for secure money management. However, it's important to remember that robo-advisors are a relatively new concept compared to banks with a long-standing history. While their security measures appear sound, only time will tell how they fare in the face of unforeseen circumstances. Ultimately, the decision boils down to your individual needs and risk tolerance. If peace of mind with a federally insured safety net is your top priority, a traditional bank might be the way to go. But if you value the convenience and potentially higher returns offered by a robo-advisor platform like Wealthfront and are comfortable with their strong security measures, it could be a compelling option. Remember, do your research and choose the platform that best aligns with your financial goals and risk tolerance. With that said, thanks for watching, and until next time.